Hey guys, this is Panakwan and welcome to my YouTube channel. So I've been talking about EOSE a lot, but this is kind of a deeper analysis about what you should do going forward. So given that, I can prove what I said previously about the EOSE stock. So I have been short on EOSE because of the fundamentals and things not piling up. I'm a quant, so I search a lot of satellite images and see a lot of different data. So I call out a short over here, and then on Jan 21st, again, I said a short over here. You can see like I've marked all my levels, and I also tell like what the resistance was. And similarly, on January 25th, again, I cited some of the financial enthusiasts and told that it's a short. And then before the earnings around Feb 18th, I again said it that it's a false bull flag, do not buy. So these were my analysis, but let's dive deep into it without wasting time. What we should do now. So if you guys would be seeing like this is my analysis report that I have built. So why did EOSE kind of like dropped 40% today? Because it missed EPS and revenue by huge. If I say huge, I mean a huge. The other thing was the massive net loss. The net loss that they have, it's $969.6 million. It's it's a huge loss. And then talking about the guidance, they were also very fishy about the guidance, what's going to happen, because were thinking that US is going to lead in terms of in battery sector, but that's definitely not happening. The stock has surged 200%, so given 40% drop, it's nominal. So it was as expected. And the gross margin concern, like still they have a negative units, they are not in profit at all. So my recommendation right now is wait, do not buy or do not sell, just wait for the water to clear out. Because financially, if I look at different things, you're going to look at how it performed from 2023 to 5 and now what people are thinking. So why did everyone piled into it? It went up by 200%. Because look at this, the revenue growth was 101 and then 600%. That was crazy. And then people are thinking that the next year growth is comparatively less, so growth has slowed down. And then profitability, so investors think about don't think much about profitability, because they were seeing revenue growth before. Even we were not profitable, then still the stock was bought. But now look at the net income. That's where the major concern is. It's minus 170, minus 280, and now it's around $1 billion, which is huge. And they have a lot of debt. So if you see the total debt that they have is 600, and then the backlog is comparatively still, they have a lot of backlog but still less. The employee count has not been increasing at all. That means the company does not know its direction as well, because in 2 years they have merely like 50% growth and 30 years growth. That's not good, because the healthy company, the signs are that employees grow. That's one thing. And revenue, I've already talked about like what the surprise was. So, and the guidance versus expectation. So the company guidance was around 400 million, while the street expectation was 507. And because the guidance was really low, street, like whoever the analysts are, they're like big analysts, they all say I can talk about more about the analysts. Like you can see like everyone was a buy, no one knew that it was coming. But if these guys missed, like JP Morgan, Guggenheim, B Riley, if these guys missed, how can we have not? So don't feel bad about yourself. These things happen. Even the big analysts from different firms didn't know. So that's like one of my basis points that I'm going to talk about is US energy storage. So what is US best? So that is battery installation. So across the US, how is battery installation market capex kind of look like? So this is what the capex people are thinking, at least analysts are thinking. So which is increasing. This is great for the company. They still can turn around a lot of things. Something with China, anything kind of negative coming out of China would give this a momentum, because this is a battery player and US needs it. So that's like, these are like different themes where the competition is there, where the slowdown is there, and what are the factors, because they have a new product, gas position. So all of these, the convictions are really high, but the profitability is still low. At Panda Quant, I will still not suggest anyone to buy this stock. Still, I would say that keep an eye and follow me on X and get your signals. Thank you so much.